Hey guys, it's Tuesday, September 15th, 2020, at about noon Eastern Time, and we're talking about the payroll tax holiday for federal employees that's coming up. And you might start noticing it as soon as your next paycheck, which, if you get paid today, it's probably today. And if not, it'll be next Tuesday, the 22nd. And if you're a FAA air traffic controller like I am, you will have your next pay period, next paycheck will be out on the 22nd, which is a week from today. So what this means is if you make $4,000 or less in a pay period, and it's by pay period, it's not for the entire year automatically, that in that pay period you will not have to pay the payroll tax. The payroll tax is 6.2%, and it shows up on your leave and earning statement as OASDI, which is the Old Age Survivals and Disability Insurance, which pays for Social Security and and a couple other things. But anyway, so you will have to pay this eventually. It's just a holiday. It's not a break or a cut or anything like that. What that means is for the rest of this calendar year, you won't have to pay that. And that's to help alleviate things because of the COVID scenario and the economic problems we're having because of it. But anyway, so 4 months for the end of this year, calendar year, you won't have to pay it. But next year, the first 4 months of next year, which starts pay period one for us, I think they said it's going to be, will be double. So you'll have to pay double that tax. Normally it's 6.2. Next, for the first 4 months of next year, it'll be 12.4. So that's a bummer. We don't want to have to do that. So what we're going to do here is set up a way that we can take money out of our paychecks now and save it for next year so that we still have that money. And it makes it so that it's almost like you never ever lost that money in the first place. And you can even earn a little bit of interest on it, which might be a good thing. The bummer about this is for people who are in the know and kind of think about these things is 12.4% is going to come out of $2021, not $2020. So if you are like most federal employees and that you get a little bit of a little bit of a pay increase at the beginning of the next calendar year, it's actually going to be taxed on a little bit more money. So that's a bummer. But not much we can do about that. We don't know how much a raise in January will be. We don't know if there will be one at all. That's not a guarantee. So right now, this is the best we can do. So I'm going to show you how to set this up. Super simple. If you use Employee Express like we do, it's pretty easy. You'll probably have, if you use one of the other systems, you might have something that is similar to this. But we're going to do the best we can to make this really, really easy. I've already got the page up, so it's not going to look exactly like this when you log into Employee Express, but the important part is everything on this left side will look exactly the same regardless of what page you're on. So the middle part here will have information about your next paycheck or last paycheck. So I didn't want to have to show you all of my financials, so I didn't want to burden you with that. But anyway, so what we're going to do is there's two different places on here where you can go to take money out of your paycheck and set it aside for something else. There's actually more than that, but this is elective stuff that most people would set up. There's a discretionary allotment, and then there's the financial allotment. This is the one that we're thinking about here. Putting money into a financial institution, a bank, a brokerage, if you want to put it in the market or something in the meantime. And there's some pretty interesting, pretty good stuff here to read if you want to. It kind of tells you what's for and what it's not for. And then how to do this is really, really easy, really easy instructions here. So let's see. So what you are going to need ahead of time is your financial institution information, including routing number and bank account number. What we'll do is we'll hit the start button here. Pretty easy. Here it goes. It asks for your banking routing code. I'll put mine in. That's the only info you're going to see from my bank right there is what bank it is. And that's Ally Bank that I used for this. Really easy. Even if you don't use Ally Bank normally to go in, it's really easy to go in and set up an account all online. You don't have to talk to anybody. You don't have to sign anything. You just go in and do it, and it's like instantaneous. Sets up an account, and it's pretty high interest. It's like 20 times the national average for interest in terms of savings accounts, which even though interest rates are super low right now, you're still beating most other bank accounts that you can get. So you do that, then you put your account number in there. I'm not going to do that now. Now, on the amount, let's talk about the amount. It has to be a dollar value here. So you can't say 6.2%. That would be way too easy, wouldn't it? So what I did is I got my trusty calculator, like so, put $4,000 because I figure that's the worst case scenario here, and I get pretty close to that, so it's not going to kill me. and then I multiply it by 0.062. That is 6.2% and that's going to give us 248. So that's how much money, if you make exactly $4,000, that you would have taken out or that you would have paid in the payroll tax. So obviously it's not going to be that exact because you're probably not making exactly $4,000 even. But that is the number that I would use. So I use 248. Now, if you know you make like or right around 3,500, some other number, then you can use that number. Just you got to get close. This is going to we're just doing the best we can. Make sure you select if it's a checking account or savings account. I use a savings account. So you hit the save button, and then it's going to ask for a confirmation, and it's going to have your email address in it too. You can set up some sort of email address for them to do the confirmation. Mine was my government address. So then you hit confirm and you're done. It's going to take you back to the regular homepage of Employee Express. And again, I'm not going to do that because that will show my all my financials again. So it's that easy. You just get that routing number, account number, and how much you want to put in. Boom. And that'll automatically be taken direct deposit from your next paycheck and put into a bank account where it'll earn interest and grow slowly for the next 4 months. And then all you'd have to do is do a transfer out of that account. Do it any way you like, really. If you want to do a bi-weekly transfer, that's probably what I'll do. It'll make it just like a little extra paycheck, a little extra dropped in your account every payday. It's basically the same thing. It's as if that money never left. So it's as if now you're still getting the money deducted, but it's being put in your own account. And then January rolls around when they start taking double that tax. Well, you're getting money put back into your account so that it kind of makes up for the extra. So keeps everything kind of even keeled. That's how I think. I don't like to give the government money or have to pay more, or I don't really like getting less because it's going to cost us a little. So this is the best we can do, guys. And if you have any questions or any better ideas for what to do with this, then let me know in the comments below. And I hope this is helpful. So enjoy, guys. Have a good one.